Hello and welcome to the presentation on Money and Credit, Chapter 3, Economics, Class 10. Money. Anything which is generally accepted as a means of exchange and a measure of value is called as money. Everything in the world revolves around money. Time is money. Let us first study about the apex bank, the banker of banks, the note issuing authority, the bank which regulates the monetary functions within the country, the Reserve Bank of India. The Reserve Bank of India was established in the year 1935. The Reserve Bank Act 1934, Part 2 of 1934 provides statutory legal basis for the functioning of this bank, which commenced or came into existence with operations on April 1st, 1935. The functions of the RBI or the Reserve Bank of India are: it is the only note issuing authority. This bank is the only note issuing authority. No other bank in the country has the authority or the right to issue the notes. It is the banker to the government which advises different banks. It advises the government on monetary policies. The custodian of the cash reserves of commercial banks. Different commercial banks. Commercial, the ones who work for profit. These commercial banks, day-to-day functions they perform for us, apart from accepting deposits and rendering loans, they do several other functions and they maintain lockers, they make our premium payment, they take care of many other aspects of our day-to-day life. Custodian of country's foreign exchange reserves. A country will be economically prosperous only when its foreign exchange reserves are increasing. So it safeguards the foreign exchange, the Reserve Bank of India. Lender of last resort. When the commercial banks are drained out of their financial resources, the last shelter is given by the RBI. The control of credit. The credit which is accepted by the country from different financial institutions should not be beyond our payment. So that control is done by the RBI. The role of the RBI, once again, supervises the financial system. The country's financial system should not be in doldrums. There should not be excessive circulation of currency notes. That supervision is done by it. The foreign exchange reserve and management is done by the RBI. It is the banker to the banks. It gives guidelines to all commercial banks, and every commercial bank should abide by the guidelines and the instructions given by the RBI. It is the only note issuing authority. No other bank or institution can print the currency notes. It prints all the notes except 1 rupee note and the coins which are printed or minted by the Ministry of Finance. It maintains the monetary policy of the country, how the circulation of money has to be done. It is a banker to the government. It advises the government on issuing of loans, depositing of funds, and many more financial activities. The importance of money. If money is not there, we cannot buy and sell anything. Money plays a very, very important, vital role in our life. Then, how was the world when money was not there? Was there a situation when there was no existence of money? What did the people do then? There was direct exchange of goods. Exchange of goods to goods is called as barter system. The commodities are exchanged. Live animals are exchanged for some other eatables or vegetables. Here, they need to identify a person who is willing to take the product which they have and willing to give the product which they want. So that means double coincidence of wants. Coincidence is something which is happening which you expect. So you here, person A is having a cock and he needs vegetables in return. He should find a person who has vegetables and he also needs cock in return. So this exchange, when it is happening, we call it as double coincidence of wants. But such kind of transactions, are they easy to happen? Is it easy to find such kind of people? Is the village very small? Is it a village or a town or a city or a metropolitan? How is it possible? Today, is it possible? It's not possible. So, what are the disadvantages of barter system? Barter system simply means exchange of goods for goods. The disadvantages of barter system were the goods were limited. The people who were producing the goods, they were limited. The need for double coincidence of wants. They need to go and identify that person who is willing to take the product which they have and in return exchange the product which the other person wants. A is willing to exchange with B. A is having grain, he needs milk in return, and B should have milk and should exchange for grain. This coincidence, this understanding should be very, very important. If this is possible, then double coincidence of wants happens. But it is very, very difficult. Also, the difficulty of division and subdivision of goods. Is the value of grain more or is the value of milk more? Is the value of cock more? Is the value of vegetables more? Can we divide cock in the same way as we can pick one, two vegetables? If the cock is cut, its life is over. So divisibility is not existing. The value of goods calculation is difficult. The difficulty in case of services. There may be a person who gives Ayurvedic medicine. The value of Ayurvedic medicine is very, very costly. It saves the life of a person. So, how it should be repaid? A life cannot be repaid by another life. So, what should be given? How does the person who treats charge? These all were the difficulties: difficulty in divisibility, difficulty in double coincidence, difficulty in storage, difficulty in services, difficulty in movement, all these difficulties. Lack of measurement, difficulty in storing the goods. To eliminate all these things, the money was invented. Money in economy eliminates the double coincidence of wants. Money is simply anything which is generally accepted by all as a means of exchange and medium of measurement. It can be measured easily, it can be divided, it can be calculated, it can be stored, it can be moved from any part of the country. You can buy anything in this world from a pin to aircraft from the money. What are the modern forms of money? Modern forms of money: paper currency, coins, deposits with the bank, loans which are taken from the bank. All this is types of money. What is currency? Money is the currency. This currency is not made with precious metal. Money, the note, for example, you take a 100 rupee note or a 50 rupee note or 2000 note, it does not have its own value. Only when it becomes the money, the stamp of the Ashoka emblem, Gandhiji's image, Reserve Bank signature, and the silver line which goes, then it is printed. It is passed by the RBI. It is called as legal tender money. So this money this money can be authorized by the government. It is the signatory. No other person can issue this money. The currency notes on behalf of the central government are issued by the Reserve Bank of India. No other individual or organization can issue this currency. This is called as legal tender money. This can be used in the day to day life, but it is not made of precious metal, it is made of paper. When you tear it, its value is lost. When it gets wet, its value is lost. When it's burnt, its value is lost. When it's crushed, mutilated, spoiled, its value is lost. Previously, when rich kings were there, they made the money with the very precious metals, and those metals had their value apart from being the coins. So, the deposits with the bank, the deposits can be in the form of accounts, savings account, fixed account, term account, like that, recurring account, any kind of account. This money can be withdrawn on the demand of the labor or the worker or any other person, whoever is having the account. Demand, you demand the bank to issue the amount. It can be in the form of withdrawal form. You put the ATM card and you get the money. You issue the check to some other person on whose name the check is drawn, and the payment will be made to them. Receive their salary, and at the end of the month, some amount of cash is deposited. That is called thrift. So the savings are very, very essential. We should not consume all our earnings. We need to save for future. And this savings in the bank will be given an interest. They Every individual needs only a certain amount of money for their livelihood. Extra money can be deposited with the bank. The bank takes these deposits and pays the interest for the deposits. That money will remain with the bank. The demand deposits are the accounts. It is the money which is deposited in our account, and we demand the bank to issue that money anytime. Can be total sum, can be partial, or any part of it. So, what is check? Check is a paper. It is simply a paper which is instructing the bank to pay the specific amount. Specific because the amount is mentioned here in words. Pay to Mr. Murthy a sum of rupees 1000. Also mentioned in the words and here in the figures, and then sign. The amount will be paid to Mr. Murthy when he is presenting the check. If this amount has to be directly transferred into his account, draw two lines. Pay account, payee. Then directly the amount will go into the account of a person. So check is nothing but a paper which is instructing the bank to pay a sum of amount, a specific amount which is mentioned on the check to the person on whom the check is drawn. That is, whose name is mentioned on the check. What do you mean by demand deposit? The money deposited in a financial institution, a bank, with the freedom to withdraw on demand without prior notice. You don't have to give the notice to the bank that tomorrow I am coming to withdraw this amount. You go any moment, the bank will have the money. So if the capital of the bank is 100 crores, 15% of that percent should be always with the bank. Remaining it can circulate in the form of loans. So anytime the customer can come, there may be need for anyone, and on the demand of the customer, the money can be paid, and this money they can use to cover their daily expenses. And this money which is given to the customer, that depositor often uses the demand deposits money to cover his daily expenses. Very little interest he gets on this kind of withdrawal which happens daily. These demand deposits can also have joint owners. Two people combined together, husband and wife, two sisters, brothers, anyone, two friends in partnership can have the joint account. The signature of both the individuals is required to withdraw the money. What are the loan activities? The two important aspects of the bank are accept the deposits, advance the loans. What will be the income to the bank then? The interest which is paying to the depositor and the interest which it is collecting from the borrower or the one who is taking the loan. This difference between the borrower interest and the difference between the depositor interest is the income of the bank. So what should be more? Number of borrowers should be more and rate of interest should be is always more for the borrowings or the loans. So banks and the financial institutions, they keep only a small portion of their deposits, say 15%, which may be called as cash reserve ratio, and they uses majority of the deposits to extend loans. In this way they make the mediation or the link between the depositors and the borrowers, and they make profit in due course. What is a festival season? We know that during festivals, during Christmas, the candle makers have a huge demand. The bakery owners have huge demand. The potters have huge demand. The cobblers during a specific season they have huge demand. Here is a case study of Mr. Salim. Salim is a shoe manufacturer, has received an order for a large from a large trader in town for 3000 pairs of shoes to be delivered in a month time, which he alone cannot accomplish. To complete the production in time, he has gone to hire few more workers for stitching, pasting the shoes. He has purchased the raw material. He met these expenses. He obtains loan from two sources. First, he asks the leather supplier to supply leather. That is also the loan. Now, and promises that he will pay for it later. Second thing is, he obtains the loan as the form of cash from large trader as advance payment for 1000 pairs. He will be delivering 1,000 pairs of shoes later, but beforehand he needs the payment for this. With a promise that he will deliver shoes at the end of the month. At the end of the month, Salim is able to deliver the order, make a good profit, and repay the money that he had borrowed. This is a single case. How many such traders have the ability to complete the task? Here is the case study of Swapna. Swapna is a farmer who grows groundnut on her 3 acres of land. She takes loan from the money lender to meet the expenses of cultivation, hoping that her harvest will definitely be very good. She will repay the loan. Midway through the season, the crop is hit by pest. In spite of better pesticide used by her, expensive pesticide, very little difference it has made. Her expectation is shattered and the crop yield is less. She is unable to repay to the money lender and the debt grows over the year into large amount. Next year, Swapna takes a fresh loan for cultivation. It's a normal crop again, but the earnings are not enough to cover the old loan, the previous loan. She is caught in a debt. This is called as debt trap. Trap is somebody who is caught, one who cannot come out of it. Debt is the loan. We pronounce it as debt. B is silent. She has to sell a portion of her land to repay the debt. Poor lady, in spite of making the rigorous hard work throughout the day, she has to repay by paying to the money lender, sale of a portion of her land she has to forego. What are the terms of credit? So Swapna has borrowed from the money lender. Salim has borrowed from the traders. Why didn't they go to bank? What are their problems? We'll see. Before going to the credit, what is credit? Credit is the acceptance of money from someone with a promise that we shall repay the principal along with interest. So, what are the terms of credit? Collateral, documentation, interest rate, mode of repayment. We shall look into each of it in depth. What is collateral? A loan can be secured by collateral. The word co means both. Lateral is sided. Collateral is what you promise to give to the financial institution if you do not pay back the loan. For example, if Swapna has borrowed from the money lender, she has pledged her land. Her land documents she must have given. She is known to the money lender for times, years. Money lender believes if she cannot repay, a portion of her land will be taken. No doubt in this case she herself sold and she repaid. So we offer some security, that security which will make the giver sure. The lender who is lending the money, they will be having security that if we cannot repay, they will sell the asset and recover the money. You can use the car, home you are purchasing with a loan as collateral. There are other items of value you can use as collateral. When a loan is secured, the financial institution can take the item you pledged it as loan. When you do not repay the loan, your collateral will be taken away. Can be gold, can be papers of the house, can be documents of shares, can be anything. House documents, any other asset. Yes, assets which are pledged as security for loan. Loans can be also taken by from the cooperatives by the farmers. The word cooperative means that few people may not be government organizations or the government cooperatives, it can be anything. They come together with a motive of welfare for the farmers and the rural. There can be farmers cooperatives, weavers cooperatives, industrial workers cooperatives. These members, they will deposit in this cooperative for some period and their deposit stand as security collateral. That security assures that if they do not pay, then their deposits can be taken away. So, with their deposits in the cooperative bank for a long period of time, they can obtain loans and that can be utilized for buying seeds, buying cattle, buying a tractor, maybe. What are the sources of loan? Formal sources, informal sources. So, what are the formal sources? What are the informal sources? Formal sources are ones which are recognized by the government. Here we can see here percentages here. Money lenders percentage you can see. Commercial bank percentage you can see. The cooperative societies percentage you can see. Other institutional agencies percentage. Landlords very less, okay. Relatives and friends and other non-institutional. Institutional, those institutionals, financial institutions which are recognized by the government. They cannot charge very high rate of interest. This is a clearer image. Money lenders 30%, traders 3%, relatives and friends 7%, others 7, cooperative society 27, commercial banks 25. What are the sources of agricultural credit? These agricultural labors like Swapna and all do not go to the bank because there is difficulty in documentation. We studied about collateral. Collateral is the asset, the papers which we are giving, the house documents, land documents, or the gold or any other valuable thing which we are owning. We pledge that we pledge it in return for the loan. If we are unable to repay, the giver or the institution can sell that and recover the loan. Documentation is registering of the document. So in a financial institution, in a bank financial institution, the documentation is done, the name of the person, the purpose for which it is borrowed, all other relevant details are entered there. This documentation is difficult for illiterate people. The field officer has to do. The people should understand that they can get from this reliable source, but they need to give the collateral. If they don't have the collateral, the loan will not be given. So, that is another documentation, collateral security, mode of repayment, whether it will be monthly, whether it will be quarterly, yearly, or half yearly. Interest rate, it is 2%, 5%, 10%, 24%. So the money lenders and other people who know about the helplessness of these people, they extract their helplessness, exploit them, and charge very high exorbitant rate of interest. So sources of credit should increase in the rural area. The government should establish institutional source like the banks and financial institutions. Cheap rate of interest should be provided for them. Non-institutional sources, traditional credit, we already studied about informal sources. the money lenders, and others. Let us now see the formal sources. All banks, cooperatives, financial institutions come under the formal sources. Informal traders, money lenders, landowners, friends, relatives also come under informal sources. Here, the richer people can borrow easily because they are literate, they give guarantee of the collateral under formal sector, and they will repay the debt on time. Under informal sources of credit, the poorer people cannot borrow because lack of asset. They don't have assets. They don't have documents. Their inability to fill in the documents and inability to repay. If the crop fails, they are a failure in repaying. Interest rate are very very high if they borrow from money lender and others. The motive is very clear. The formal sources, they want welfare to uplift these helpless people, whereas the informal sources, they want to make profit, they want to grab the asset, little land which they have. The RBI supervises these functions. It supervises the formal sources of credit. They should not charge very high rate. It monitors the banks in actually maintaining the cash balance. They should not drain themselves. They should provide the loans or the demand deposits whenever asked for. It sees that banks give loans not just to profit making institutions but also for the needy to buy the equipment for their sustenance and livelihood. Banks have to give periodically information to RBI, such as uh, to be how much is lent, to whom it is lent, what is the rate of interest charged. And now the RBI also gives guidelines. If the customer is not satisfied, if he has grievances, he has presented the grievance or his problems to the bank and bank did not resolve within the 1 month, the complaint can go to RBI and RBI will take strict action on such banks. You can see the image of informal sector. Here, the poor people, mainly exploited by the money lenders, sometimes the relatives, friends. You cannot trust anybody. Anybody can seek whatever asset they have if the payment is not done in time. These do not work under government organization. There are no stipulated guidelines for them. Only trust and the name and the confidence that the person will repay. These are the things which are taken into consideration before giving a loan. The rate of interest is also very very high. This can lead to very big trap, debt trap. Inability to repay may land them into abject poverty. So, who gets what? Is it necessary that the bank and the cooperatives increase their credit in rural sector? Why? How awareness has to be created in the rural sector? The poor households, the blue percentage, the blue color represents that informal sector, and the purple color represents formal sector. The poor households, lack of documentation, lack of assets, lack of collateral, education, there is no education for them, they are illiterates. 85% they borrow from informal sector, only 15% go to the bank. Households with few assets, 53 go to the informal and 47% to the formal. Well off rich households, 75% they go to the formal sector, to the banks and the cooperatives. Only 28 go to the informal sector. Rich households, only 10 go to the informal sector, 90% go to the formal sector. So, number of regional rural banks should be increased in the rural areas. Regional rural. These banks are set up to provide short term, long term, medium term loans to the farmers to save them from floods, from emergencies, natural calamities, from famine, any kind of disaster. Number of land development banks should be increased, that should be reachable. The formal loans which can be granted to the rural areas. This is a list of 5 sources in rural area which provides credit. Land development banks, these banks provide a considerable amount of money as a credit to the farmers by using their land as collateral. Cooperative credit societies, they also lend the money. Regional rural banks also lend money to the farmers and rural areas, artisans. Commercial banks and also government provides the loans. This is the logo of M.A.B.Ed, National Bank for Agriculture and Rural Development, established in 1982 as a bank to uplift the agriculture and also to take care of sustainable development in the rural areas, giving them all sources of financial assistance to be prosperous. There are certain self-help groups. These self-help groups, they come together around 15 women, especially the rural people, as the name itself says, helping themselves, self help, स्वयं सेवक संघ, अपने आप को जो आत्मनिर्भर बना सके, स्वयं सेवक संघालू. Banks are not present everywhere in rural areas, so these people, they collect some amount of money every month, they deposit in the bank. When the bank gets trust on these people for nearly 2 years of savings, when they have done, then the bank issues loan to the group. In the name of the group, the loan is granted, and the group takes, the self help groups takes the loan and gives to the member who is needy. The money lenders and other people, they used to harass these groups and the helpless poor, but the bank trusts them and issues. This is the image of a self-help group. They discuss, basically women who come together, they discuss, who save continuously, around 15 members or even more. Each one of them saves with the bank in the name of the group, and the group recognizes it, gains trust, and bank issues the loan. That money is given to the most needy person in the group. The group follows up that the person repays the amount in time. They also meet timely, they discuss their problems of most utmost importance, resolve, give assistance to one another, and stand as a helping hand to one another. The advantages of the self-help groups, it helps the borrower to overcome the problem of lack of security. If they don't have the collateral security, their savings in the bank for the past 1 or 2 years, that stand as security. People can get timely loans for variety of purposes. They can buy seeds, they can buy some equipment for the farm, they can perform the marriage of the child, they can make renovation of their house, they can make some improvisation on the field, they can implement green revolution aspects. Self-help groups are building blocks of organization of the rural poor. So the rural poor are getting strengthened, the women, they are becoming financially self-reliant, they gain trust on themselves, they need not stretch a hand in front of others to borrow. They are self-reliant, self-trusting. The regular meetings of these group help them to discuss their problems, resolve. They also discuss on health issues, nutritional matters, domestic violence. They stand as very important active citizens in resolving their problems. 15 to 20 members who are basically living in the nearby, that is neighborhood, they meet regularly, they save regularly. This is the case study of the Grameen Bank of Bangladesh. Mohammad Yunus, sir, he has received the Nobel Prize in the year 2006 for his contribution for developing this habit of savings amongst the people. If credit can be made available to the poor on terms and conditions that are appropriate and reasonable, these millions of small people with their millions of small pursuits, small needs, can add up to create the biggest development wonder. These are the words of Professor Mohammad Yunus, the Nobel laureate. The Grameen Bank is one of the biggest success stories in reaching to the poor. To meet them, to understand their credit needs at reasonable rates. Started in the year 1970 as a small project, Grameen Bank in 2018 had over 9 million members in about 81,600 villages spread across Bangladesh. Almost all of the borrowers are women and belong to poorest sections of the society. These borrowers have proved that not only are poor women reliable borrowers, but they can start and run variety of income generating activities. These women are very skillful, and they have gone to the extent of proving themselves when the need comes. I hope my concept is clear. Thank you, children. God bless you.